Hi and welcome to the market alert for Thursday, the 20th of August 2020. So yesterday the dollar apparently has the best day in 2 months as Fed sinks stocks, bonds and bullion. So let's have a look and see what happened yesterday. We'll look at the dollar and silver in more detail, but first let's have a look at yesterday's trades. And the volatility picked up quite nicely yesterday morning, so let me just rewind the recording to the off, so we can see where we are. Following the market alert, prices traded back below the 200 bar moving average through the close and down to the 12,850 psychological BRN level. There you can see them buying in at the moment. No signal. The market then sees further selling and sideways moving. See again the buying trying to bring the market back, and this is what happens next. We have a potential buy signal, and what do we have in the way? We have the 200 moving average, which is at the first profit target. So as I move along, and also just notice that we have the close as well, which was obscured there by the cursor. Okay, so there we see the market hitting the target price, and then we just sneak through the 200 MA. And if you ever wanted proof of the power of these levels, then look no further than yesterday's trading session, as the market then traded sideways 3 times, banging its head against the 200 MA, which you can see there. Also notice on this bar that the volume is high and the prices have come off the high, so selling at the 200 MA level there. And then prices start to look for support at the 20 bar moving average. We get back to break even, and then it breaks the 20 bar moving average there and moves lower. Also note how prices come off the lows here. The volume has increased, again indicating that there is some buying in the market. We have another buy signal, and again this time we've got the close and the 200 MA to contend with once more. First time the market didn't break through it. This time it does. Stop is at break even. Where does the market stop? Right on the DP level for just under 50 points profit there. So prices, as I move the cursor, you'll see them go through the DP and then start to reverse. And as I said before, there's nothing wrong with taking profits on a rally at these levels, because these are very, very important price levels. You can always get back in, and on this occasion you'll see the market coming back, and there you have the pros also selling at this level. Prices then trade sideways to lower. They come back and have a look at the 200 bar moving average. You see the volume pick up at this level as prices came off the lows, and then you'll see prices starting to move higher once they close back above the 5 bar moving average. And as I drag the cursor along, you'll see prices trading sideways and then eventually trading up to the high that I'd marked in here at this level, 12,921. And of course we get to this level. I'll just drag this across here, and you can see the volume increasing, and we get a potential exit from any trade that was bought in as a re-entry trade at this level. Prices then drift back down. They trade to the 200 bar moving average, and here the market finds support. It's incredible, because as we got to the last 10 seconds of this bar, the signal disappeared and the market just traded to the close. Again, you see an increase in volume at this level, but the market failing to move lower. Prices need to get back above the 200 bar moving average. Again, you can see how it was a resistance area for this market in these 3 bars, and then eventually prices broke back through. A small green bar there, and now we start drifting in a sideways range until we get another buy signal. And now we've got these 2 areas to contend with. We've got the high of where we saw the selling before, and the exit from the DP on the the second trade of the morning. So price is struggling with the DP level, and interestingly enough, note that the volume in this bar is greater than the bar that traded up to it. So again, there is selling pressure coming into the market. If the prices can't advance and the volume is greater, there is some pressure on the downside. And here you'll see the market again stuck at the DP level. Nothing wrong with taking the profits at this time, and again you can see the volume increasing in this bar. So exiting the trade is not a problem. And then prices drift down, and again before the close we have another look, and we come through this time, and now we trade up to the resistance that we've got from the second trade on the other side of the chart there. It's how to view at the moment, and once again prices start to come back once more. So the volatility increased in the morning. There was one really good trade. The rest were hard work given the DP, the 200 MA, and the previous resistance areas, which are plain to see in this video how powerful they really are. So in the afternoon, the market was waiting for the FOMC news, which is always a concern. The market will just trade sideways, which is what we're seeing here. And again, you can see how the resistance from here held the market at just 12,957, just over the 7 points higher than the psychological level. And it continued like this, watching paint dry. And I think the best thing to have done was to walk away, but I decided to take the short trade here, and I thought we got plenty of scope actually to come down to the DP and the 200 bar moving average, and this was beyond the first profit target there of the scalp. Also got the crude oil news out as well at 3:30, and plus there was an OPEC meeting as well. Interesting bar here, should have been warned here. Prices coming off the low, not even trading to the previous bar's low, reversing, and the volume greater. So this means that there was an absorption of the selling on the downside there. Prices trade back up, they turn green on the MDI, only to reverse back, and I thought, great, we're now off to the races. However, this tiny bar here that you see forming now, again, the market doing absolutely nothing in trying to attempt to move down to the scalp level. Price is staying below the 5 bar in the next bar, and also again we were hit with this bar at the 20 bar moving average, and I thought, great, we're going to see a reversal here, but no such thing. The market's waiting for the FOMC, and because there is very low volume, as you can see here, they're free to do whatever they want to do, and of course they want the markets up. That's what they want, and here you'll see the market coming right to the stop and failing there. And again, I thought, great, we're back below the BRN, we should move lower, but only to see the market just before the news take the trade out there at the stop. You could have aborted earlier. I know of traders that won't stay as long. They'll just say, well, let's see, if it's not going through, then I'm getting out. And I did speak to a couple yesterday who did that, but I stayed in hoping that we get a reversal off this and then head down. It was just they were too tempting, like magnets, to draw the market. But as I said earlier, they were waiting for the not the NFP, the FOMC meeting minutes, which were out at 7 p.m. So the crude oil news came out. It wasn't exciting. There was less than forecast. And yeah, the market did nothing after that. It just traded sideways onto the 4 p.m. Close, or not close, but the end of the session, which you'll see as I drag the cursor along towards the end of this video. Somewhere around about here. There you go. Okay, so that was yesterday's. Let's have a look at the overnight, and we've got some weakness in the daily chart. You can see prices trading down to the 20 bar moving average. It's a shame we couldn't have had this volatility yesterday, whereas yesterday we had another inside bar as the market was in its sideways move. Still hasn't really broken this yet, so let's have a look at the overnight and see where we are and where prices kicked off on the overnight as we look here. So we can see that prices open at the previous bar's close. We saw the selling coming through the DP level. That is now below prices in the early hours, and then we get a a biggish sell-off here and a cluster of volume, climatic volume, to bring the market back at the S2, and also the psychological level there of 12,750. Prices have traded back up to the low and failed to get anywhere above it, with selling coming into the market at this level, forcing the market lower. So this is going to be an interesting one this morning. We've broken the previous day's low. This is a great place to go short when you get this sort of action here as well, because if it can't close above the previous day's low, then in the daily charts you're getting the consecutive lows as prices move lower in the chart. If we look at it here, so you can see the lower highs. If the high can't be breached on the previous day and the low's taken out, then as prices come back to that low, they are then sold into and then hopefully continue to make their way lower. And this is why I have these drawn on the charts, and also why I love to do this with the chart, so I can see exactly where I am. If prices are below the daily pivot, they are considered bearish. If they're below the 200 bar moving average, they're considered bearish. Does it mean that prices will continue to the downside? Absolutely not. But any chance of getting back above these levels are likely to see the markets go back and retest the upside as well. So you know where you are probability wise by looking at the market in this compressed way. The price action reveals an awful lot. Okay, let's have a look at some other news before moving on. And interestingly enough, the Bank of Nova Scotia pays 127 million in fines over criminal precious metal manipulation. Said this for years. I was a conspiracy theorist, along with a lot of other people on YouTube who could actually see what was going on. The bank's actions were designed to lead others to trade in ways they never would have without what was believed to be a legitimate market activity. 127 million is nothing, the billions they made out of the manipulation of these metals, but thankfully this is all coming to an end, as you're seeing in the daily market alert, as prices continue to move to the upside. And Forex Factory news today, all medium impact for today, not anything major, fully fed. This used to be a high impact news item, it no longer isn't. We've got unemployment claims again, another 900,000 potential losses, and then we've got CB leading index also out later this morning. And meanwhile, in other markets, let's have a quick look around and see what's going on in the Dow. Let's have a look at the daily chart. This too is also rounding over, as you can see here. There's a rounding over of prices. You can see them curling over. 20 bar moving average is the first target price to the downside. Let's just have a quick look at yesterday's intraday. This is the Fed's meeting minutes released. You can see the market at the 200 bar moving average, prices move lower. Come back to the 200 bar moving average, DP as well. Prices move lower into the end of the session there. First part of the session, there were no signals as I was watching this, hoping to trade it. Prices though did break above the DP and traded to the upside there before waiting for the FOMC minutes, which came out later. And you can see how the volume picked up there. I haven't actually looked at what they were. Don't really need to know. I do like to keep up to speed with the fundamentals, but the Federal Reserve, I know what they've been doing for years, manipulating the stock markets, and certainly had a hand in manipulating the precious metals markets as well, because the last thing they want is the precious metals to be moving to the upside, purely and simply because this has a major impact psychologically in saying that they are failing, which they are. Anyway, back to the dollar for yesterday. You can see we had a straight reversal there after the market broke the 92.51, but it probably won't be long before we resume from the 20 bar average, the dead cat bounce and move lower. The only reason the dollar moved higher is no doubt based upon something Powell said. There is a pattern there over many years. And finally, I forgot to mention the precious metals yesterday and the silver market. You can see yesterday they slammed the market for yesterday. You see the increase in volume there, and yeah, I mean, prices are bouncing back once more on the overnight. So once again, they failed to move the prices. The silver market is incredibly strong at the moment. We saw last week where they sold, it was actually 13 billion ounces of silver, not 2 billion when I mentioned it in the market alert. Went back and checked. So yeah, silver looking pretty strong at the moment. Needs to get through $30 an ounce to move to the upside, and gold in a similar vein. Okay, I've gone on long enough with this video, and I will conclude here. But as ever, thanks for watching. See you in the next one.